This is the Ridiculously Amazing Insurance Agent Podcast, hosted by me, Kelly Donahue Piro. This show is for growing insurance agencies looking to maximize their biggest investment, their people. Listen to the top agency performance partners clients share their story on how they boosted their performance by executing a plan. Let's head to the show. Hey everyone, welcome to another episode of the Ridiculously Amazing Insurance Agent Podcast. And today I have some great friends and I'm excited to interview that I just think do a phenomenal job, one. And two, they add a whole new dynamic to something that most agencies don't think about. Most agencies run their agency off their P&L, but in all reality, there should be much more financial considerations for multi-million-dollar businesses. And that's where Agency CFO comes in. If you don't know Ro and Don, we're excited to introduce you today to them. And just a friendly reminder, we don't do any advertising on the show. So all we're doing is getting out there and telling people about the great things in this industry. So if you like this podcast, make sure to like it, share it, leave a comment, or give us a question to answer on the next podcast. We'd love to hear from you. But let's let the main stars of the show take over, Don and Ro from Agency CFO. Hello, everybody. We are here with the Ridiculously Amazing Insurance Agent Podcast, and I've got some friends on with me today, longtime insurance professionals, of course. And I'm actually in their state right now, recording this from, as you guys can see, a hotel room. And you guys are an hour away from where I am now, give or take?
Yeah, just about. Well, maybe a little bit longer with this snowy night.
That is true. So I'm going to Skinny Atlas. Did I say it right?
Yes.
Skinny Atlas, New York. And you guys are located what part of New York right now?
We are in Clinton, New York, just outside of Utica.
Excellent. So I'm pleased to have here my friends from Agency CFO. We've got Don and Ro, and I'm going to butcher your last name. But it looks like a very fine Polish last name. Am I right?
It is 100% Polczynski. It's actually easier than it looks.
Polczynski. So we've got you Polish, and then Ro, are you Italian?
I am. So my maiden name was Lucadamo, and I couldn't hyphenate because I'd have every letter of the alphabet.
Like a vowel soup in there, right? Yeah, I do have to come over for dinner at your house sometime, between like pierogies and I could. Yeah, I know you've invited me, so now I'm going to invite myself.
Absolutely.
So I'm so excited to have these guys here because this is something we don't really get into in agency performance partners, which is the financials. We do recommend you have a budget. We do kind of say you do need an accounting person. What does that look like? But for these guys, they dive deep. And I think this is such a cool need inside the industry. So why don't we start by just, how did insurance find you? Because no one finds insurance, right?
You nailed it. So it actually started with Don. Years and years ago, we worked together. That's how we met. And it came to a point where it was time to leave that company.
And I ended up starting out as a controller for an insurance agency at that point. And that was around 20 years ago.
Very quickly became CFO.
It was, yes. I very quickly became CFO and in an agency it was millions of dollars of revenue in that agency, but not enough work to keep a CFO busy. So what happens? I was the IT person, HR, ultimately sales manager, facilities, admin. I took on 12 hats by the time I was ready.
Of course, HR, right? Because no one wants to deal with HR. So it goes into accounting like.
Yeah, I don't know why that
Best idea. Put a numbers guy in charge of HR, right?
Well, you can track the time off. You can track the time off, right?
That was my least favorite role.
In every agency. Every agency trying to figure out how to get rid of it.
Absolutely. And so it was a very, very progressive. It is a very progressive agency. And he would go to all the industry events that agency, the networking. And I'm an MBA as his wife. I would go along. And it was so funny because people never knew that I didn't work at the agency because I could just speak insurance. I picked it up quick. I sometimes would go to the sessions. I would learn all I could. And it just was such a natural fit that we were actually at an industry event and his career coach was there, his mentor, and he was approached to be a virtual CFO.
Yes, this agency in Detroit, they were a bit smaller. They were losing their full-time CFO.
Oh, wow.
And there was no way they needed a full-time CFO, but yet they needed financial support. They had a good bookkeeper, they had a CPA, but they were used to having more strategic financial support. Yet they can't afford a CFO. They should have never afforded a CFO. So I was pursued, and they really was pursued.
It really was pursued. Like I said, he's married to me.
And I said, all right, we'll give it a try.
Not just a business pursuit, but
it was a business pursuit, but they were so hot to have him work for them. It was actually very endearing and very complimentary, but also it's got that funny take to it.
So I gave in, and I said, because I had a full plate back at the agency, but I said, okay, I'll be your virtual CFO.
And it went through his existing agency. It was all on of course, we're very up and up, above board.
And it worked extremely well. So it was kind of our proof of concept. It was such a great success. It was great for me getting out to see another agency. It was great for the agency because it was a fraction of the cost that they were paying their CFO.
But they get your intelligence.
Yes.
It made great sense. It was a great win-win.
And so we wrote a book along the way for leadership. We've got some stuff out just as our personal core values and our mission we do. But all our CFO work is for independent insurance agencies. And it became so big, just life, that the agency owner said to him, take it and go. And
he always said to me, Don, you're so good at this. Why don't you be a CFO for other agencies? And I said, I got enough to do here. But it came to a point where I really did see the opportunity, and it is our passion. Strategic finance is really our passion. And I said, if I could work every day, all day in my passion, it's time for me to give up the other hats, and I'm going to go out.
You want to do HR all the time?
You can have HR. I am going to the world of finance, and this is what we love to do. I said, why would I not want to do that all day, every day?
And the owner was so generous. He is still a client to this day. We absolutely love them, love the whole team. And it's just worked out so well because I had RD Advisory Group. We just created this agency CFO program as under the RD Advisory Group umbrella. And over the course of the past 4 years, it's just become this incredible, incredible journey. And we get to meet people like you. I mean, this is just the synergy and everything about it we love.
Yeah, I just say to people, when you're in high school and you take those personality tests, like what should you be when you grow up? Yep. And I think mine was like teacher or like all these things, like very standard. But then started thinking I get to teach people, I get to impact people's lives. It's like all the same thing, just a different format. And insurance is so many of the things that just, they never put insurance on those tests. I think I would be like, what? It's boring.
We've actually encouraged many young college students just graduating, including our own nephew, who's now at a captive agency learning the ropes of insurance. Another friend of ours, their son has become very successful. Go learn how to be insurance. It's not what they talk about in schools. You will have the best career for life. And they're both happy.
I know. And it's such an impact you can have on your community and things like that. I'm curious what you guys think about this. So we've been encouraging agencies to go through a 2-year plan. They do a 10-year vision. And around year 5, we think if you have an interest, you should start a foundation. Good for tax purposes, but maybe a spouse or a son or daughter or someone in the family. It's not like, hey, insurance, I don't think I like this, but you can get your business clients together that are, of a certain stature and really impact the community by pooling resources.
Well, it's amazing you say that because we do have a vision board, and for a program, we do one program for some inner city college students that's tied to our book. It's like our nights and evening type of thing that we do. And on our vision board, we have the RD Advisory Fund at our local community foundation. Yeah. So that's on our vision board. We are totally, totally in favor of that.
I know. And it makes you feel good. And it's just, I look at all these, and I get to go see their communities. Like we just talked about being in Skinny Atlas and how cool the community is here and stuff. But I don't know, it solves so many things. And you can be at every single one of your kids' soccer games and be home for dinner, all at the same time. So it checks so many cool boxes.
It really does. Really does.
Absolutely.
But we're here to talk about the financial side. I'm so curious because I feel like it's like the thing I don't know enough about. And we're even learning about it as my business grows more and more. As a business grows, financial needs change, and like budgeting and what you're trying to do and where your money goes. When you're a scratch startup and just high growth, it's like, what's in the bank account?
Yes.
And sometimes you're surprised and sometimes you're really sad. Or when I first opened my business, I think a lot of agencies sort of run like this, even if they've been in business for 30 years. It was like, what do I owe the IRS and why? And then what do I get for a bonus and why? And it's like, I remember my accountant calling and be like in December, be like, I am either excited about your calling me or not so happy. Where are we at?
Yeah, we're on that line.
And it was like a wild card. It was like a surprise, like, oh.
Yeah, I think where Don and I come from, and I'm sure I'm going to assume that you appreciate this as well. We are small business owners. And in our work, the work we do is very, very closely tied to every agency owner we work with. Mm-hmm. And we relate to them as small business owner to small business owner. Sure. And what we do, we're built almost on the insurance agency model, except instead of selling a product, we're the product. Right. And the reports we offer are our product.
Now, if you were a CFO, there's one thing that CFOs definitely despise: surprises. That example, Kelly, that you gave is exactly what happens and still in the vast majority of agencies today. And that's because they don't have clarity, and we're going to delve into that.
Mm-hmm. So everything that we talk about, we actually do at RD Advisory Group Agency CFO for ourselves. And that's something, Kelly, that we'll along the way share with you all those tips for agency performance partners. I mean, this is really important.
I can't agree more. And I'm just going to put my 2 cents in before we dive into your tips. It's like,
absolutely, because
there's a conversation I was having today of, times have been good. So you don't think about the finance because there's money to buy a building. There's money to, the contingency check rolls in. There has not sometimes been always this need to dive deep. Right. And so and I'm trying to coach agents of like, maybe today things are good, but you don't know how you're making money. You don't know what you're making money on. You look at a P&L, but you really don't understand it because you spend 5 minutes on it, and you look at the line items and how are you going to hit your goals? Because what you're saying is you're just going to bump along. And like, why I think it's so cool, kind of our synergy is I want to know your vision. I want to give you the plan to get there, and you guys work with them, find out where the money is to get there.
Absolutely. Yeah, you may be working on a operational plan or a goal plan. We work on a financial plan to make sure that financially those objectives can be met. So they work hand in hand.
Mm-hmm. Or what about when the carrier cuts your commission, or you don't get contingency because you got hit with a hurricane or a tornado, or what if your producers aren't profitable, and how are you going to fund growth? Because it takes time, and then you start stressing about finances, or how do you know when you get a new building? It's how do you know how to manage your book?
So I think that you're right that many agencies, it has been a pretty good few years here. And yet many agencies are vulnerable to surprises. So some negative, what happens when that contingency check doesn't come? What happens when the hard market turns soft? There'll be some nasty surprises.
Mm-hmm. Or partners break up, like you don't see it coming, and now the finances are very different. Or I also think that there is a lot of kind of, to me, some vulnerability in the idea of, what should owners take as compensation, or how to spend your contingency bonuses. And so I think a lot of times I'm like, the spouse has spent the contingency bonus,
That is a hot topic, especially this time of year, because the checks are going to start coming in. And we say, live by contingency, you die by contingency. Yeah. And what we actually do, one of the first things Don teaches everyone is you actually normalize it in our financial model, we estimate your contingency, we divide it by 12, and that's how much you have to spend a month.
Yeah, otherwise it distorts profitability. So we don't want to, look at April. We run our income statement in April, and oh my God, we look like we're we're at 40, 50% profitability. No, you aren't. That's only temporary. And so we want to make sure that our clients understand what their true profitability is. And many, many, many agencies out there are unprofitable if it wasn't for that contingency money, and they're vulnerable.
Our approach to contingency is like, it's your benefit for a job well done. You cannot run the agency by it. And there's a metric, there's a percentage that goes to as a bonus to you for running a great business, or distribution to your team, however you want to do that. Then there's your rainy day fund, a percentage of it. And then there is your investment in growth, right? Like, so it's all, and I'm sure every agency is, that's how we look at it, like a different percentage model based on whatever's going on, whether you want to take some of that and pay off a partner, you want to take some of that, pay down debt, you want to take some of it to pay down a building. But if you have a little equation for it, whatever that money is, you know how to apply it. And you can say, well, if I want to grow, now I have a year's producer salary in the bank and I don't have to stress about it,
Absolutely.
And that's the management of it. That's the awareness. It's not, unfortunately, we've had many agency owners that don't truly understand their cash flow. And what it says on your bank statement is not what you have to spend. And you don't want to be out of trust, and the contingency can throw it off. So normalizing everything, managing everything in this financial model that he's built and that we employ is really how we help shore up the agencies, so then you can work your magic.
Well, and I want to say this before we dive into your tips too, of in fairness to most of the agency owners, no one's taught them about this.
Correct.
Absolutely.
Right. So, I have a business degree and I learned finances and economics when I was 19.
You just said this. What were you just saying? One of our team members wants to go for further education.
And Kelly, that's a big issue. When you go, I learned accounting when I was that age.
I took accounting.
And there was no context to put it in. It was basically an academic exercise.
Yeah, it was theory.
Absolutely.
Yeah.
And that's the issue. Even when you graduate, you get into a business. Now, how do you relate? You forgot most of what they taught you in Accounting 101. So how do you... And that's the gap. And there is no place, in my knowledge, in this industry where you can learn to understand the finances of an insurance agency. It is a unique world.
Mm-hmm. I couldn't agree more. And then I think it's also very private to talk about at some of like the industry events we go to. Like, no one's going to be like, here's my P&L, here's my profitability. And I think it's even, there's Reagan Consulting does some work on like what the profit margin should be and things like that. But then if I'm investing in growth, my profit margins are going to be different because I'm making the capital investments, or I'm trying to get my EBITDA right. So I'm going to get up to sell. And there's so many different seasons of an agency too, that I think it throws it off a lot.
Absolutely. And that's why CFOs are required, because I say our number one job as CFOs is to interpret.
Right.
Because you're right. If you're a high growth agency, you're likely not a high profit agency. And that's okay. If you're preparing to sell, then you probably do want to maximize EBITDA. So absolutely.
We tell the story behind the numbers.
Right. That's awesome. Well, and to your point on how you got into this, so many agencies out there can't afford a CFO, right? Like,
absolutely.
It's hard to say until you go to a certain size that you even have a full-time bookkeeper, and then a controller, a comptroller, and then a CFO. Like, you have to really be growing at a high clip to be in that ballpark to have a CFO.
Absolutely. The fortunate thing for me is I landed in a very progressive agency and had access to the top consultants, insurance and financial consultants across the country to learn from. So this is what the basis is. That's why we have assembled, and we continue to learn every day. We learn every day and build new tools and new ideas every day.
Yes, without a doubt.
Absolutely. So, we kind of crux the whole podcast on like 5 things that you just commonly see that, what are problems and that some of the solutions to the financial challenges. And so love to hear. Go ahead.
We're going to base this really about 5 things that are really going to enhance your profitability. So everybody, what do you
hear that?
We want to make money. We want to make profit.
And Don, actually, these are on the tip of his tongue. These are just natural, intuitive things that came to him. But as we looked at the list, we're like, oh, this is Kelly. This is Kelly. This is Kelly. There's so much.
Well, you bring the money so that we can go spend it and grow.
Absolutely. So the number one issue we find across the board is inattention to results.
And I think, Kelly, you hit upon it when a CPA or accountant called in December. Well, what do you think the year looks like? That's not a good question. Inattention to results is it was surprising to me at least, the biggest issue we see across the world of insurance agencies. They just don't look at the results. They don't know what their revenue is or their growth is, and they sure don't know what their profitability is. And if they think they know what their profitability is, they're probably wrong because they don't know how it's being calculated. Mm-hmm. So inattention to results, we say you should be looking at your complete set of financial results. So that's revenue, profitability, cash flow, new business, and client retention at least monthly. Hands down.
Well, and I will say this too, I was always trained, it's not how much you make, it's how much you keep.
Mm-hmm.
Right.
We're always for owners taking their compensation that they need and paying their producers what they need to pay. But it is that balance. And we're going to get to that pitfalls of compensation in just a couple of points. But is that balance of understanding how it affects the global picture of the agency? And one thing no one ever talks about, and this one is a tough subject, but it's also the hit by the bus plan. God forbid the agency owner was hit by the bus. What's the financial standing of the agency? How do those results look? If it has to go to the family, if they have to come in and put it on the market, or the partners have to take it over, or God forbid, you don't want these scenarios. But yet, as business owners, community leaders, everything that an agency owner is, it's actually your responsibility to do it.
We have seen agencies transform tremendously doing one thing. They just start looking at the results every month and being held accountable. So every client of ours receives a monthly report set and an earnings call, and the results are reviewed in detail every month. And if there's one thing, that has been transformative.
Well, I love that too, because, in our world, we do retention and new business and your book growth and where are you placing business? Like, an agency I was just at, it's like they found out they're placing all this business with Travelers, which is one of their lowest commission companies. And so last year, that's where they put most of their new business.
Yeah. So how does it make sense?
So it's interesting when you start like unpeeling it and how you make money. It's not just sell new policies.
Correct.
And we even couple it with, we say, if you won the lottery, could you walk away cleanly and not? Because I hate the hit by a bus is like so sad.
I like the lottery better. That one's
so be sad. And then you'd be like, everyone give you like a pity bone for a minute and then your family. And I'm sure I've seen it. The agency owner passes away. The spouse knows nothing about insurance. And then they either have to fire sale it. It's a big disaster.
See, so that's why you get to be the nice person and say, hit the lottery. The tough numbers guys, like what happens if you're hit by the bus? It gets back to that HR thing.
Well, and I'm curious what you guys think, because we see a lot of times like the sons or daughters are taking over the agency and they've been producers, like, different than a standard producer, but a perpetuation producer. And, they don't want to get into the HR and the operations. They just want to go sell because that's where the parents gave pride, right? Like that's how they showed affection. You did a good job. You sold policies. You got to sell policies.
Absolutely.
But what happens as the agency grows is that the owner cannot be the top producer any longer.
Correct. We see this all the time.
It should not be. They can make the rain, but they need to pass and say they may have all the connections in the world, but they need to pass it to an account executive so we can take it, run it, and own that renewal and own that relationship. And I'm sure you also look at things from your point of view of the valuation of the agency. Like, how do we get the strongest asset? So when you are ready to sell or something happens, it's not just about the cash flow, but the value.
One of the I'm sorry.
I was going to say, there's so often the children coming, the next generation who are going to take over and assume ownership of the agency. Yeah, they're good salespeople, and they've never been taught they're ill prepared to handle the finances of the agency. And we face that a lot.
We face it a lot. And there's 2 points to be made. One, some of them have never seen the finances or understood it because it's all been done on a handshake and there's nothing to see anyways. So we have a lot of those.
Mom and dad don't want you really to know what they make.
There you go. So there's
all the things that might be stuck in the finances.
Yes. Yes. So there's all sorts of layers when it comes to what we call them the legacy transitions.
Mm-hmm.
And some producer agreements that may be not good for the agency, but he's been with me for so long, and
he owns his book. What?
Yeah. Oh yeah, yeah. That just sends. That's not a good moment. That is not a good moment. And what we find is this is actually going to lead perfectly into our next one. So we had inattention to results because. And agency owners, we love you. We're business owners too, but you're always chasing that shiny object.
All right. Well, I'll be real. I'm a CFO. I don't care what shines. Here's what shines, and it's no surprise. It is the ordinary.
It's the money.
If we do the ordinary, and I know Kelly's there to support you, if we do the ordinary really well, we will be extraordinary. It's that simple.
And tackling. Blocking. Yes. And tackling.
Yes.
So what drives me absolutely bonkers is I walk into an agency and it's like, well, we have this and we have this and we have this, and none of it's getting used. No one understands how to use it. They're only using like this much of their management system, which I could go off for days on the both with the management system companies and the agency, and how it shouldn't be this hard. It shouldn't be this hard to get your numbers, by the way, out of a management system. So that could be a whole nother topic. I'll need a drink after that. So
that one, it is so tough to get your head around. And how many times, because we've seen it, I want to say 1 million times, which I wish was an exaggeration, but it's not. How many times, Kelly, have you seen a team after the owner has gone to a conference or a group meeting or a mastermind, and they come back and everything's got to be done, and the team?
We have a name for that.
Okay, what?
It's the cowboy syndrome. So they come back and we're going to do this, and we're going to do this, we're going to do this, and I bought this, and no one's got a plan because no one can execute, right? You got a high sales-minded entrepreneurial mind that they can't get in the weeds. The agency's missing an actual implementer. And so the staff's like, I was like, first of all, we got to deal with the burning buildings that are here. Like, we have problems.
Absolutely. And it's that obvious, and it's that simple. Everybody's looking for a silver bullet. Everybody wants to go to a conference and they're going to learn this next great thing or this next great piece of software. That's not what this is all about. It's actually doing the fundamentals. The blocking and the tackling is where your opportunity likely is, almost always.
The best thing they can do is go see Kelly and come see us, because we're going to take care of the ordinary. And once all of those foundations are in place, then you can go have fun.
Or my favorite is I look at their tech stack and I'm like, why did you get this? Well, we need to do texting. You actually have 3 other platforms that have texting included in them. Oh, I didn't know that. Yeah, this one actually integrates right into your management system, so you don't even have to do any of this other fancy stuff. So why would you do that? Well, I was at a conference and so said it's the greatest texting platform. And I'm just going to do my PSA announcement real quick.
Go for it.
Whoever is on stage at any of these conferences, okay, I get it. They're amazing. They do a great job at the one thing that they're talking about. And you are going to hear 12 of them. And you're going to want to do 12 things. Okay. So you have to pick and choose, because at the end of the day, they do one thing. And I work with a lot of those people, and they have a whole list of things we're working on that are absolutely broken.
Yeah.
Okay.
Yeah. We call it the lead domino.
Yeah. This is not a silver bullet. Okay. Don't go diving all in thinking it's going to solve all your problems. And I kind of want to kind of sidebar and hear what you guys think about this. Like, kind of going into profitability and blocking and tackling. So inevitably, and it's a phone call I have to have this evening after you guys, it's my staff thinks we need more people.
Oh, do they never think that? Is that always the way?
What small business owner doesn't have a team member who doesn't think they need more people? I
look at the revenue per person. I'm like, you don't need more people, but they're not getting to their work. Mm-hmm. Well, what are they doing? They're spending 4 hours trying to place a log cabin with pit bulls and a trampoline, and because they don't want to let somebody down or tell them no. So they're wasting their time on garbage or following up with people who don't pay their bills. And that's where they're spending their time. So then they don't get to the other stuff because they don't know how to make a decision or has not been clear to them what to do. So they think they need more people.
And it's really fun. This is something that we will do for our clients is ideal client. I do it as if it was a bullseye. So who's the bullseye target? Have the agency owner and the team, we list it out and then slowly go the circles out there. Mm-hmm. And, it's hone in on where the revenue is coming from. Because you want the money calls. Everyone deserves to be taken care of. And there's a place for that. But you're right. When it comes to a team that's overburdened and stressed out and just their pants are always on fire, let's even it out. Let's focus.
Well, they're not documenting. They're not operating efficiently. They don't have to tell anybody no. And so they just get backlogged, they pick and choose, and then, it ends up with a disaster. So I always say most agencies don't need more people. They either need better people, they need their people trained and equal out. We see this all the time, not to get off another tangent, but
go for it.
You've got the staff, the head count's right. The experience level is wrong.
Right.
So
yes.
Your OG workhorses are burned out and up to their eyeballs, and they can't train these people because there's no time and they're not good trainers. So these people are skating by with a super small book. These people are killing themselves. And now all of a sudden we have the right payroll. We just don't have the right experience and we don't have any plan to fix that.
Mm-hmm. Until you come in.
And that takes a little bit to go unpack.
It does. It really does. And that's many of the cases we've seen is the inequity. But also there's an inequity, and this leads into the third one, which we call the pitfalls of over-under compensation, where as a whole, the compensation might be aligned with Reagan's best practices, and that we have permission from them to use it as benchmarking in our financial model. But when you look at the individual players, the producers may be extremely overcompensated, and then you have to explain to them, we can't afford service people for you.
Right. Because you're making a salary and new and renewal, and you're really an in-house producer. So I'm paying for the marketing because you're not going out generating anything. And by the way, then you bark at everybody. It's like, I totally get it.
Compensation. If you can get compensation right, then so many other pieces fall into place. Mm-hmm. The issue with compensation, if your compensation is out of alignment, let's say we have our producers are too highly comped, very difficult many times to correct. If you have an overcompensation, whether it's throughout your agency or just a segment of your agency, that's very hard to correct because no one wants to take a pay cut.
And even not even picking on producers. I don't know if you've seen it, Kelly. There may be one or two legacy employees or managers from a previous owner that their compensation is so high, and there's an industry leader calls it retired in place.
Yes, they're just collecting their check.
They're collecting their check.
Tech savvy. They're often burned out, and they're stirring the pot behind the scenes. But I call them de facto family. So usually,
yes, and they're culture killers.
Oh, and by the way, they serve as dad's book.
Yes.
And dad only likes to deal with this person. And by the way, they might have babysat us.
Yes, we've had that happen where agency owners have employees that did babysit them or knew them when they were kids. And the dynamics are terrible. The compensation becomes very awkward because you're paying them for not the scale of work you need.
I have to share the worst one I ever saw.
Okay.
Because I'm curious if you can top this. The woman was 72 years old, personal lines account manager, $265,000 a year.
Oh, that's gonna be tough to top. I don't have one right now. That's a good one. That's a good one.
Because dad,
he would pass out.
Dad put her on a high salary, and then commission, and then renewal. And dad passed away suddenly. Son takes over.
Wow.
And could this, on the HR, the legal side, how does this affect any?
He was making more than him.
Absolutely. That's way out of alignment. So let me flip the table now. And this is more of a recent phenomenon. Before, if somebody was, if the agency came in and they came low on compensation, I would pat them on the back and say, good job. Now the world has changed, and we've got agencies who've been undercompensating their team. And the team is like, okay, they are the envy of everybody else because now they're getting recruited left and right because, hey, now here's affordable talent just looking to jump ship.
Well, can we talk? Sorry, go ahead, Ro.
Oh, no, we've been preaching right size your compensation. Get those employees up to where they need to be. Go ahead, Kelly.
Talk about account managers and how much they've sopped up because there aren't as many producers that are like really doing the client like interface, hard conversations. We're not marketing anymore. We used to spend $10,000 on the Yellow Page ads. We don't spend that anymore. With that marketing budget, I don't know where it went because in a lot of agencies it went nowhere, right? And the account manager are doing producer jobs, but not making commission, right? They're doing account manager jobs, and all we do all day is tell them what they did wrong.
Mm-hmm. It's very true.
And we're paying them. And I don't want to get into numbers because every market's different, but we're paying them what an entry level position might make out of college today.
Absolutely. Mm-hmm. That's a problem for many agencies now. That has become their issue.
And I'm saying there like, these people are killing themselves without clear direction guidance. In a lot of ways, there's no manager, there's no nothing. And this isn't their personality. And we're undercompensating, I think, account managers across the board in a lot of ways.
We are right on that same page. And when you think of the intellectual capital that the account managers actually have, they are so valuable. They're the encyclopedia. They're the Google of the agency. Hey, what was with this client? And they'll rattle it up right off. But
then we go into, I'm getting recruited and I find out what market value is. And I come back in and I shake the person down. And the relationship and trust is broken no matter how you slice it.
Absolutely.
Yeah.
There's no good outcome.
No. And it doesn't lead to a great exit. And so it is something that we have spent, I would say the second half of 2021, it became the focus quick. We caught on quick. And once we hit June, we really started pushing agency owners to look at their compensation, raises, bonuses. And we told you the story at dinner, Kelly. Even within our own team, we had a production goal. And because of situations, we took our focus off of production and we had to refocus in a different area. And our team member, we could not give the bonus for production. We did not meet those numbers. It was by design. What do we do? How do we do that? And Don and I met and we called it the above and beyond bonus. Mm-hmm. So we still rewarded for those efforts, which were extraordinary, but it was a shift in effort. So we're not going to give a bonus for the sake of giving a bonus. We're going to acknowledge the why behind it.
Yeah. And I believe everybody in the whole agency, whether you pick up the phones, you bookkeep, you do data entry, I think everybody should have a growth bonus.
Yes.
This business is growing. There should be a percentage of growth every quarter. And if it's not growing, we don't give the money.
Absolutely.
And
it cannot be a softie.
Yeah.
It's a hard line. And we do walk that if they didn't earn it, it's okay to do something different, but not for
I think
that.
there's a difference between like a strategy or like,
Yes.
like we had planned that 2 other people, we couldn't find them, so we couldn't grow. Like there's a difference between a business intelligence versus we were just sloppy, right? And sometimes
Exactly.
people have to feel the pain of not getting a bonus to understand that they need to perform differently, right? It's an interesting thing with and I think compensation confuses agency owners a great deal. And I'm so grateful that you're a resource for that, because I get even tripped up in different markets. Like when you go into small towns in Indiana, you pay one thing, you go to Miami, you pay a whole different ball of wax, and the job's not different, just the marketplaces.
And now with the virtual world, it's become even more complex.
Because the Miami agencies are now recruiting the rural agencies, and now the playing field has totally changed.
Yeah.
And getting back to that growth, that, as you said, the growth, we love net growth. It's all that new production, but what is your retention loss? And that leads to our fourth, the lack of focus on client retention, which I know speaks really near and dear to your heart.
Well, and we look at it also like adding the youthful driver to a policy shouldn't bum you out. Like you should be pumped. The big audit that comes in, you're not like, oh, there's a $40,000 audit. What am I going to say? It's like, there's a $40,000 audit, people.
Let's go for it. Let's go for it.
Hey, Safe goes raising rates, everybody. Safe goes raising rates. Like we're going to have some tough conversations, but yes.
Opportunities.
Right?
Yep, they are opportunities.
But in the interest of time, sorry, go ahead, Don.
Retention is one of those misunderstood. Rarely, every time I talk to an agency owner, I ask them, what's client retention? And very few can tell me. And if they it's great. It's great. Our clients love us. Yeah. And then they'd be surprised what the data actually says because it's not what the data says. So there's two or three aspects of client retention. One, we got to know how much business are we really losing. Secondly, we've got to understand why are we losing it? Why are the customers that are leaving? Why are they leaving? We can't change retention if we don't understand the why behind it. So we got to understand why.
It's because price moved or died.
Yeah.
It has nothing to do with how I did. I had nothing. It's all other factors.
Yeah, right. I hear that all the time.
And we've done deep dives into even by carrier, even by number of policies, even by agent.
There's even a huge split between the number of policies, premium, and revenue.
Yes.
Like
absolutely.
You might be losing your worst customers. I'm okay with that.
That's fine. That is absolutely fine. If it's by design.
And I think that the component of like why people are leaving, we actually will not allow agencies to use price. We remarketed them, yes or no. We had a renewal review, yes or no. So if you didn't have a renewal review and you didn't reshop them or be on top of the rate, they didn't leave because of price. They left because we gave crappy service.
Absolutely.
Yeah, it's a service issue. Yeah, without a doubt. And then
I know we have to get on to you. Do you have two more to go?
Just one more.
Oh, one more.
I've been slipping them in.
All right, before I go to the last
I'm really on it.
CFO must say there's a huge difference if I'm at 90 to 92% retention or 88 to 90. It's a mathematical thing that we should show you.
The
compounding.
Oh,
the compound is crazy.
We map it out too, and it's like, and it's also how well the agencies run. And there's also agency 92 and 94.
Absolutely.
That's where we target our clients. I want you 92 to 94, crest 96, depending on what your 94 to 96. I'm like, that's a 2-year plan, but 88, you're spinning your wheels.
Long-term value.
And you're burning your people. You're burning your people because they're spending so much time working the new business that it's a killer. And the fifth one is it gets back to what we started with, which was we call it the neglect of carrier, contingency, and bonus management.
We see this rampant throughout agencies, but the vast majority of agencies do a poor job of either having a carrier management plan, managing their contingency or other bonuses. It is like whatever happens, and they're surprised. Well, I'll be surprised when the contingency check comes in or doesn't come in.
Well, and here's what we see a lot too is because I get pushback on this. I am all for this. I am like, and when they see the number, it clicks. Till then it's like, but Don, we do what's best for the customer. I say, you're putting in a bunch of business with freaking Progressive. You tell me that that's best for the customer. They're the freaking cheapest and you get paid the least commission on it. No one is benefiting from this except for Progressive because they figured out the easiest system and the cheapest rate.
Yeah,
absolutely.
Like, because if it's a decent, fair commission, that means there's an investment into the agency, there's an investment into the community, and you can be a better service provider, that partner.
And define best for the customer.
Yeah, exactly.
Is it a better policy? Is it a better claim? Is it the fact that, I can get their underwriter on the phone and I don't have to go and spend 2 hours on hold with a call center? What is best?
Or is it that, you're offering yourself as an agent that in the midst of a God forbid tragedy, you're there right with them.
Mm-hmm. Oh, and by the way, we can't fund producers because well, if you place business correctly, or even in some places, we recommend fees. Fee or lease profit customers. Either you're going to run them off or you're actually going to make money on them.
Absolutely.
So there are a number of best practices for carrier and contingency management that we teach our clients. And look, there are going to be losses which are uncontrollable. Absolutely. We can't, that's just the nature of our business. But there are certain things we should be doing purposefully and consistently to manage this very important source of revenue, as well as
the carrier
relationship, and understand the impact to our profitability. There are agencies, again, who would not be able to exist if it wasn't for carrier and contingency bonuses.
So one thing that tweaks me, because I am a big believer of managing your carrier relationships, placing business. We say you have tier 1, tier 2, tier 3 carriers. Yes. That may change based on things that are going on. But the carriers today do individual desk level incentives. Like spin the wheel. They're 1099ing them. They're sending them gift cards to their house. And now my account manager doesn't have time because they're so busy trying to rewrite people so they can spin a freaking wheel for a potential $25 Amex or Amazon gift card. And now they're placing business with somebody I don't want them placing business with. Oh, and by the way, it's going directly to them. Yeah. So, and the carrier just signs the agent up. There's not like you as the owner have to go to that carrier and say, take them off. Now you're the bad guy. And by the way, what if you have somebody who's marketing the risk? And what about that receptionist who's doing the intake on that? And, what about the fact that, hey, we're actually running a contest, which is going to get us to a different tier and a better underwriter and better pricing, this company, and we're taking business away for that for a $25 gift card.
Absolutely.
I'm beside myself.
And some of that goes back to compensation and the employee experience. And I'm all about employee experience. If you make it, the owner does have to take care of themselves. There's only so far you can push servant leadership. Right. I love it, but you still have to serve yourself, but still make it such a great experience. And the why let's not do that $25 gift card wheel thing. Let's do something within our agency for ourselves.
I think it's what you're saying. Like somebody has to be managing that, right? Like, yes. Again, times are good. You're making contingency that no one's cut commission in a minute. Like things are good. It's only when things go crazy that then it's like everybody out of the pool, Yes. And you've heard it. People miss bonuses by like a couple policies, or some states where there's like the life requirement on like auto owners, or, some of them like they're missing huge money by not selling like 10 life policies for the year.
Mm-hmm. And let's manage that. Let's understand that. And it'll serve everyone better in the end. So actually, Kelly, that's our 5. And
I appreciate that. Yes, you've gotten me all fired up now. So
I did. We seem to do that. There's so much synergy and connection, and it's so complementary. You need both sides.
And I think that, for people out there, what I love about what you guys do is you take something, what I feel is complicated because I don't do it every day. And even in my business, like I feel like I'm always learning and trying to educate myself on how it works, and think it's like that with all business. Like you have your thing you do primarily, and then there's this other side of running a business that you don't really ever get taught. You learn trial and error, fire. So for what you guys do, and I just want to say this to everybody out there, like these guys make it simple. And knowing Ro and Don, the thing I love about you guys is you're never going to make someone feel like silly or stupid because they don't understand it. Like if anything, it's like, I get it. No one's taught you this. And I feel like the financials is a very like, it's a sensitive topic. It's vulnerable. It's very exposing, right? Of, having a stranger come in. And I just feel like you guys make it so there's no shame or guilt if things aren't maybe into best practices. It's like, let's get that plan going,
Absolutely. And we've been amazed. Our agency owners have been so open. And it's been tremendous. We have developed tremendously deep relationships.
And dear friendships. I mean, we truly, and I'm the human of the group, so I get very attached to people. But it is really just such an honor. And the amazing thing is if we need business advice, we know we have agency owners that we can call and say, hey, look, can I run this by you? We're thinking this.
I take your brain.
And that's what makes this so special is this is business owner to business owner. Our number one focus is trust. If we don't have trust, then we can't help anyone. And we take that very, very, very seriously.
So tell us, like, what are the programs that you guys have? Somebody's listening to this and they're like, I don't really know much about my finances. And I don't know if I can afford you guys. I don't know if I'm big enough for you guys. So maybe break it down to like, hey, depending on the size agency, what do you have programs? Like, what are you targeting? Yes. Your bullseye thing? Like, who would work with you? And maybe what programs do you have?
The first and foremost is we do love core values. We have to connect because it's got to be a trusted relationship on both sides. And that's very, very important to us. We have 3 basic breakdowns. We have our mastery program, and that's for usually agencies over 1.25, 1.5 million in revenue. We only speak revenue. We don't speak premium because
Cash it.
you can't spend premium. Life with the CFO. And so certainly if people want that program and they're growth minded, they're fast, there's enough, if it makes enough sense, we will allow people into that program. We have a middle range program we call the Accelerator. It's for that mid range of about 500, 750 to that 1.25 million. And we're just in the midst of our first cohort for agency owners under 750, and that's called the Executive Academy. And we had a session this afternoon, and Kelly, your compliment came to heart because we had one of our cohort members thank us and send us a cup of tea.
Oh,
it was awesome. It was awesome. What a feel-good moment because we don't make her feel stupid. Because we explain it. So we will be doing more cohorts of that because we want to level the playing field and help everyone.
Put it into a different perspective. I think you got to be over 10 million in revenue probably before you can afford a full-time CFO.
And even then it's 15 or 20.
So going to a virtual fractional basis.
The CFO is not going to be your bookkeeper.
There you go.
Exactly.
So I think for most agencies, a virtual fractional basis makes a lot of sense. And that's what we do.
Yeah. So we are here to help.
I know, the stigma in insurance too is like, hey, it's different, right? You're dealing with data from Epic. You're dealing with data from AMS 360. You're dealing with these, premium financing and where does the cash flow? Like, I would love to say that a normal CFO can step in and I think that they could learn it, but it's nice to know that you speak the insurance language. And that's
all we do.
That's
why it's not like I'm training you on my industry to give me it. It's like, there's just such a nice synergy there.
Absolutely. Absolutely. And so many agencies think that's the job of their CPA. Their CPAs don't
CPAs all the time.
Understand the world of insurance. That's why we are all experts in and only in independent insurance.
Because your taxes, they know tax law, they know tax guidelines, they don't know.
Which we don't.
Cash flow, right? Like No, I think you guys are such a gift to the industry, and I hope people out there. So if people out there are listening and say, gosh, I need this. Like, I think I'm interested. What would be the best way for them to learn more about you or get the party started? Have a call.
Just have them email me at roep@rdadvisorygroup.com. And I'm always happy to have a quick chat, and we'll see where we go from there.
And guys, a lot of our clients use them, nothing but rave reviews. And so I can't speak highly enough if you're looking to say, oh, should I do this or should I not? I'm going to come out there, and say, if your agency doesn't have a handle on your finances, you have nothing. So in some respects, I'm going to shoot myself in the foot. But like, if you're looking at like what we do, what they do them first, because you're going to have a much better grounding foundation for when we can come into play and say, here, we know we need to grow. We know we have a cross-sell opportunity. We know we need producers. We can help you with the strategy. Let them handle your finances first.
Well, and on the other side of it too, Kelly, and thank you for that. Truly, truly, thank you. We will help them find the money on the floor that they're just walking over so that they can get everything in an alignment for you. And we recommend your programs all the time. And we are just thrilled to have those shared clients and friends in common, because it takes a village. It's really funny. It takes a village.
Yeah, it does. It does. And I think for small business owners, everybody's trying to fight the same fight, right? Like it's important to have experts so that you can do what you do best. And if financials are not your superpower, they're not mine. That's why there's a Don out there whose financials are his superpower.
Yes.
And I want to just take 1 second. If we can take a moment, I know that you're actively growing the business and we have a lot of listeners. So is there any opportunities that you have at the company that if somebody out there is thinking about a career change, like, you're growing so much, like what opportunity would be out there for someone looking?
Oh, bless you, Kelly. Thank you so much. This is something we relate very, very closely to all agency owners. So if you have any background in insurance, accounting, finance, if you were an owner that your buyout of your merger is done and you're ready for that next opportunity, we have everything available, especially we have advisors. So we will take you, Don will teach the person, take them up, and we've done this so that they're advisors.
This is a very personal thing for me because I sat in those seats.
Yeah.
And I've been in the agency world, and it's a great world, but sometimes you may be ready for a change.
Yeah.
And maybe there's a lot of things you do tactically that you said, no, I'd like to do something a little more higher level strategically. Well, we are a whole different ballgame where you get to work with agencies every day at a strategic level. We don't do any transactional posting, so we're only we're at a different level. We're at strategy level versus the tactical level. It's the most fun thing, invigorating. If you're looking for a change, we're a change.
So definitely contact them if you're looking for something different in your career. I know that they'd be great to work for. So thank you guys so much for joining me.
Kelly, thank you. We truly appreciate you. Truly grateful.
Hopefully we all survive the snowpocalypse coming right now. So, we're used to it, so it's not so bad. But no, thank you guys. And hopefully we will see you again soon.
Absolutely. Thank you. And safe travels, Kelly. Bye.
Thank you.
So there's one thing that I'm committed to solving as I turn 40, which is eradicating the word busy from insurance agencies. So often, so many times, we're not hitting our agency's potential just because our team is busy. And sometimes they're busy doing the wrong things. They're over-servicing the least desirable clients, or they're not sure how to manage email and tasks, so they're just working off of 5 different places. Or inevitably, they're taking too many payments, which the carriers can take. There's about 10 different core issues that agencies face with time management, and lo and behold, we have just revamped our time management course to tackle each one by one for your team. What I've found in my experiences is that when agencies feel like there's a little bit more time in the day, the cross-selling increases, the follow-ups on new business explode, and ultimately your team turnover is lower because they're not as stressed. So you might be thinking to yourself, well, how does time management help me grow my agency? It helps you avoid all the obstacles that you're spending too much time on, such as putting out fires. And when your team is working uniformly and collectively and can do this thing, which is raise their hand and ask for help, and you as a leader have metrics to manage backlog, you can dive in and be more productive and efficient for your clients. So it's been said that all of our programs hinge on time management. If you can nail down time management, you can make renewal calls. You can have a better closing ratio. You can run your agency more efficiently and effectively, and that's what I've solved in this course. I hope that you become a student. I hope that you subscribe to our courses, because if your team meetings are lagging and your team needs access to great knowledge, our courses are the answer. So what are we waiting for? Let's get started moving your team from busy to effective. And let's go ahead and eradicate that B word from all of our agencies. Have fun and let's go kill it, guys. We want to make your agency ridiculously amazing. And all that starts out with efficiency and effectiveness in your client experience. What are you waiting for? Let's go do it. Well, hopefully you enjoyed that conversation as much as I did. I know I got a little fired up in there, but some of those things that they're talking about just, drive me kind of nuts. As a small business owner myself, I know it's a progress, but there's got to be things on your radar screen that they're talking about. And if they're not, let's give them a call. They do a phenomenal job, and I'm sure they'd love to hear from you, just like us. So if you do work with Agency CFO and you're looking for the other side of how to make those numbers work in your favor, give us a call. We'd love to hear from you. I hope everyone has a ridiculously amazing day and that you go off and learn more about your agency's financials. We'll see you soon.